does Medicare cover bariatric surgery? And the answer is Medicare might cover bariatric surgery. Medicare is only going to approve or deny coverage on a case-by-case basis, and ultimately your physician and Medicare is going to have the final say. So again, they might not. It's, talk to your physician, start working with Medicare, because they might cover it, but they might not. So if they don't, I wanted to show you an alternative way to pay for your bariatric surgery. So if you didn't know, which I'm sure you already did, bariatric surgery can be really expensive if you're having to pay out of pocket. So according to obesitycoverage.com, bariatric surgery costs between $15,000 to $35,000, and the average cost is $25,000. So it's expensive, especially for people that are retired, living on a fixed income. That is a big chunk of money to pay for this type of surgery. So how are you going to pay for it? So again, Medicare is unlikely to cover unless it's medically necessary. And even then, Medicare is going to look at it on a case-by-case basis. Again, it's worth looking and working on whether or not Medicare will help you pay for your surgery. But again, don't hold your breath that Medicare will cover it. So where most people end up at is either looking at their retirement savings or using a credit card or some sort of medical financing. And retirement savings may or may not be a good idea. It really depends on the amount of money that you have in your retirement, how much you'd have to take out for your surgery, how does that impact your overall retirement plan. And then the other question to think about is you pulled all that money out and then one of you were to pass away, is the remaining spouse going to be in a position to be able to supplement their income with the retirement savings once household income has been lost? So the other option, credit card medical financing, most bariatric surgeons offer one or multiple types of medical financing. The Care credit card is probably going to be the most common way. But financing these can be a slippery slope, especially if you're living on a fixed income. And then again, you have to think about, if you're a couple, what happens if one of you passes away? Is the remaining spouse going to be able to cover that monthly payment on that medical financing? So what I did is I went to Care Credit, because again, it's going to be the most common medical financing option that most surgeons are going to carry. And based off of the average cost of bariatric surgery of a little over $25,000, the smallest payment you're looking on that is $691 a month. For some couples, for some people, maybe that's not a big deal, but for a lot of people, again, in retirement, living on a fixed income, that is a big monthly payment, and a lot of people cannot afford it. So as I mentioned earlier, there is an alternative way to pay for your bariatric surgery, and it could go well beyond just paying for the surgery, as you'll see here in a second. And that is to pay for the surgery with a reverse mortgage. And there's multiple reasons to consider this. First and foremost is it can provide access to income tax-free cash to pay for the surgery that you want. And by doing that and using the proceeds from the reverse mortgage, it could help you retain your retirement savings. So instead of drawing out a bunch of cash, use the reverse mortgage proceeds instead. You could also, at the same time, consolidate debt to free up cash flow. So you could pay off credit cards, car payments. If you have a mortgage currently, lump all that into the reverse mortgage to then, again, even free up even more cash flow. But I think more important, beyond just being able to pay for the surgery, is to be better prepared for other large expenses during your retirement. So that could be additional health care costs. It could be long-term care costs, home maintenance and repairs, car maintenance and repairs. Again, there's just a lot of other expenses that are likely to pop up, and the reverse mortgage can help you be better prepared for those things when they do. So let's take a look at a scenario here of Steve and Terry. They're both 65 years old. They have $3,600 a month of income. They both get $1,800 a month from Social Security. They own their home free and clear, which is awesome. but they've only got about $45,000 in retirement savings. Terry needs and wants to lose weight, and bariatric is her only hope. She's tried everything else. Nothing else has worked. It is her only option to lose the weight and get healthy. The issue is they don't really want to use the retirement savings because they're not going to have much left over. I mean, they're going to take out over half of their retirement savings just to pay for the surgery. And they don't really want to use a credit card and get straddled with a big monthly payment because that could really jeopardize either Steve or Terry when either one of them predeceases the other and household income is lost. So they gave me a call to see if the reverse mortgage might be an option for them. So here is their scenario, and this makes the assumption that they're not making any monthly mortgage payments. They're still paying their taxes and insurance, or they still have to pay their property taxes and their homeowner's insurance. And I'll show you in a minute what it looks like if they make payments, because it's amazing what happens when you do. So this bar chart, the blue represents the home value, assuming a 4% appreciation rate. And the orange represents the loan balance. And initially, we're starting off with $44,000. And that's because we're lumping in the closing costs and we're pulling out the money to pay for the surgery. We can see that this loan balance is increasing over time. And again, the reason that this loan balance is increasing is because we're making the assumption that they are not making a monthly mortgage payment. Again, they got to pay their property taxes and their homeowner's insurance. But because they're not making a payment, the interest in the mortgage insurance is getting added to the loan balance, and so that's why the loan balance is growing over time. The green represents a line of credit. So beyond the initial funds that they're accessing, Steve and Terry would have access to a line of credit initially of $110,000, which for Steve and Terry, that is awesome because that's more than twice, what they even have available in their retirement savings. Now, what's really interesting is you can see this line of credit is also growing over time. And the reason that it's growing is because any funds that are available in this line of credit grow at the current interest rate plus 0.5%. So there's just more and more money for Steve and Terry to access at some point in the future. So let's say in 10 years they needed a new roof and there's $228,000 available. They could pull out $20,000 or $30,000 for a new roof. And here's the great thing. They still don't have to make a monthly mortgage payment, even though they've drawn money out of their line of credit. They still have to pay their property taxes and their homeowner's insurance. But imagine that one event of replacing a roof would almost completely wipe out their entire retirement savings. So basically what we're doing is just creating another source of funds to help them through the rest of their retirement. Now, Steve and Terry looked at this and they're like, you know what? If we were going to do this any other way, we would have a monthly payment. So why won't we just make the payment that we would have made on the Care credit card? And so that's what they decided to do, which is represented by this bar chart here. So again, they're going to make a payment of $691 towards the reverse mortgage. Again, the blue is the home value. That has not changed at all. The orange, you can see they're paying this thing down. And at about 6.5 years, they've pretty much got this thing paid off and they just stopped making payments. And because there's a small balance, so you can see it's growing a little bit over time. What's really exciting, though, is this line of credit, okay? So if we look at year 10, we now have $319,000 compared to $228,000. So we've basically added about $80,000 to $90,000 to this line of credit by them simply making the payment. And the reason that's happening is dollar for dollar, whatever they pay towards the loan balance not only pays the loan balance down, but it increases the line of credit. And remember, the line of credit, whatever's available in that is growing at the current interest rate plus 0.5%. So it's almost like by them making that payment, it's almost like them putting money into a savings account. And the fact that there's just more and more money available and the funds that they have available are also growing. And look at this, in year 15, when they are 80 years old, they're expected to have $458,000 in that line of credit. And that could come at a time where Maybe they need in-home care, or they're having to pay for people to clean the house or take care of the lawn, or other expenses that are likely to be higher, including their medical expenses. And now they have a ton of money, $458,000, to be able to cover those expenses. And remember, when they started this, they only had $45,000 in their retirement portfolio. So what this has done is it's just created another source of funds for them to help them out through the rest of their retirement. So through the examples that you just saw, you can see there's many reasons to consider getting the reverse mortgage to pay for bariatric surgery when Medicare won't. First and foremost, you're not getting into credit card debt. And if you're retired, living on a fixed income, credit card debt is just not something that you want to be dealing with. It's very hard to get out of credit card debt living on a fixed income. Secondly, instead of spending a big chunk of your retirement savings on getting the bariatric surgery, you can retain those retirement savings so that you have them available for future expenses. And then it creates flexibility in the monthly mortgage payment, right? So with the reverse mortgage, you have the ability to pay as much or as little as you want. You can pay whenever you want. You could stop, skip, reduce, increase payments at any time. So it gives you a lot of flexibility that any other type of financing does not offer. Now, you still have to pay your property taxes and your homeowner's insurance with the reverse mortgage. It also creates an additional source of retirement funds with that reverse mortgage line of credit, which then could be used to either supplement your income, or it could be used as a source of funds to deal with other financial shocks that may pop up at some point in the future. Maybe future medical expenses, long-term care needs, home maintenance. All of those things can be very expensive, and we've just created another source of funds to be able to deal with those issues when they pop up. And the great thing about making payments is that you have access to all the funds that you've paid towards the reverse mortgage balance at any point in the future. So again, it's like saving money or putting money into a savings account, but you're just making a payment towards the reverse mortgage. Now you have to follow the loan obligations, which are you have to live in the home as your primary residence, pay your property taxes, your homeowner's insurance, and maintain the property. Doing those things, you're good to go. Any questions, give me a call, especially if you want to see if this would make sense for you. There's no cost or obligation to speak with me. There's no cost for me to work up numbers, run scenarios for you. I'm happy to help and answer any questions that you might have about the reverse mortgage and if it would be a good fit for you. I look forward to speaking with you. Thanks.